Hey everyone, welcome to November. We have 2 months left of the year. So let me give you what happened in October. And it is a big surprise. I'm really haven't seen these numbers for such a long time in Calgary. It's unprecedented to see right here that 64.61% of all the detached houses listed sold in the month of October. Last October was at 41.65%. To put it into perspective, a good year in October, we'd be at 23% absorption rate. So to be at 64, almost 65% is a unprecedented amount of demand for people wanting to buy these detached houses. And of course, with demand comes an increase in pricing. Our benchmark price now is at $549,900. We saw an increase month over month of 0.63%. That's high. I mean, if you think of 0.63%, if that was like that every single month, you'd see a significant price increase over a year. 10.48% increase in pricing just since last October. So that's a really significant increase for Calgary. And of course, we just haven't seen that for a long time. And if we put it into perspective, there's our peak markets of 2014, 2015. We were at 516,000 at 2015 as our peak, and now look at where we are. So now we have record prices in Calgary. So the demand just continues. Here's the hard numbers. 1,333 sales out of 2,063. Compare that to a year ago, we had 2,700 properties listed. That's a significant drop in the amount of listings. We had 1,139 sales. So not a dramatic increase in sales, but a really dramatic increase in the amount of listings. So with that lower supply and a little higher demand, that leads to a price increase. It's pretty simple economics, and it doesn't look like it's going to stop anytime soon. The average day on the market is 39 days. That's not a lot of time to sell a house. Here's our market distribution, and you can see $300,000 to $400,000 detached homes are now slowly becoming a thing of the past. So it's really pricing this market right out. 400 to 500 is still our most popular price point, but look at 500 to 600 is creeping up to 400 to 500. So that tells you, when you see price increases like that there's a lot more people willing to go into the 500s, where only a few years ago those same people would have been shopping in the 400s. And this, of course, spills over into every price point, and you can see strength in every single one of these different price points. The $1 million to $1.5 million, it's the one I always talk about, 4.08%, still a very healthy, strong market. So it's good news for sellers, maybe not as great news for buyers, but with these low interest rates and the economy really starting to turn around in Alberta, it's looking like this is going to spill over into the new year for sure. Here we are in the semi-detached market. These are attached properties without condo fees. And we're still in a seller's market here. Keep in mind, as I always say, this is for most people, not everybody, but for most people, this is their second choice to buy an attached property. At 51.87% absorption rate is really high, considering 31% a year ago. Our benchmark price has gone up to $427,800. That's up 0.68%. It's up 8.5%, or almost 9% from a year ago. So these prices just continue to rise. Again, you look at the 2015 market at 412, and there was a lot of infills back in these days that sold. And here we are now at 418. So, these are all new highs for Calgary for semi-detached. 222 out of 428 sold. So that's a really healthy demand for those properties. 39 days on the market. It's not taking long. you'll see our market distribution, and it's so easy to look at these charts and recognize that 300,000 to 400,000 is the most popular. And that's the people that just can't quite get over the $400,000 hump to get into a detached house. So they prefer here and not have the condo fees. That's why this is such a large market. But look what's on the rise. The $700,000 to $800,000 infills have now taken over the $600,000 to $700,000 spot. So this market has really improved. That's good to see, because there's a lot of people in 2015 that bought these properties for $700,000 to $900,000, and they just like to maybe get back to the values that they once were. That is a good sign to see that. So here we are with row houses, otherwise known as townhomes, and you can see the absorption rate drops down to 33.05%. Generally, these are townhomes with condo fees, and it tends to be the third choice for people that want to buy real estate. But pretty healthy market as well. I mean, considering 23.87% absorption rate a year ago, prices at $300,300, that's up 7.29%. It's up 0.23% month over month. And if you look at where we are here at 2021, we're approaching the peak of the market in 2015, 2014. There were still a lot of people here that paid a premium for some of these townhomes back in those days. And we still haven't quite gotten back to those levels yet, but we're certainly climbing up the ladder, and it's looking like we're going to get there soon. 271 out of 820 sold. So put that into perspective, 271 compared to 217 last year, 820 active listings compared to 909. So it's pretty simple formula again. Higher demand, lower supply leads to some price increases. 46 days on the market on average. And you can see again, this is the highest demand now is dropping between 200 and 300. So the people here are looking for that townhouse, and often these are properties that have a small yard. Oftentimes they have a garage, you can have a basement. So they really do appeal to young families just starting out. Maybe if you've gone through a divorce and you just want to get into something that's a little more affordable until you get back on your feet. All those sorts of things really appeal to this market. And also investors like these too, because a lot of these, at $200,000 to $300,000 with the rent you can collect, you can have a small cash flow depending on how much money you put down, especially with these low interest rates. But you can see it does, goes to the 300 to 400, then there's just a big drop off after that. So the demand really is under $400,000. And so if you're buying a townhouse condo and you really want to take a look at the investment side of it, you should probably keep it under $400,000 for ROI. If you're getting into 400, 500, 600,000, you should be looking at a different product, and you'll do a little bit better on that for Calgary. Now here we are with the apartment condo market, and back into buyer's territory. It is kind of sad that we're still in buyer's territory, but 23% absorption rate is better than it was a year ago from 14.36. 252.2 is the benchmark price. But you can still see we're a ways off from where we were at the peak of the market. We got a lot of climbing to do, and we just haven't seen the demand, even with this big demand for detached homes and price increases. Condos are lagging behind, but at least we're in positive territory. At least we're in the black. We're going in the right direction. You condo owners are going to be happy to see that. 360 out of 1,559, little bit lower inventory from a year ago, and obviously a much higher demand from 360 to 234. So that gives us a little bit of price increases. And if you go back here, you'll see we're year over year, we're up slightly. Month over month, we're up slightly. But we're not seeing the kind of increases that you would see from the attached properties and the detached properties. And you can see the bulk of these properties are being sold under $300,000, and it just drops right off past that. So this is really the market for condos. It'd be pretty tough still to sell something in this market, over the 400,000 range. At least there's a decent market at 16.9%, but definitely once you get over 400, it becomes more difficult. I would say as you're coming up into the holiday season, if you are thinking about selling and wanting to know timing, this time of year there's an opportunity. We should normally start seeing properties coming off the market. A lot of people don't like to sell over Christmas. So I've actually had success with this, where with the lower inventory, we were able to get an offer in the month of December. And maybe to your surprise, December is a relatively strong month. I do find typically the first 3 weeks in January are quite slow, and then things start picking up. But right now with the demand we're seeing, it's really hard to predict. This is not a normal year. I really don't know what's going to happen in November and December. It's hard to predict. The demand is still there. So the bottom line is, I don't think there's a wrong time to be going on the market. So if you're ready to make the move, maybe in February, March, this still might be a good time to be listing. And of course, if you're buying, well, hey, the interest rates are still low. My attitude is, if you're buying, you should be looking. You can be patient. Something will probably come up that works. But if you're not looking, then you're not going to find an opportunity. And sometimes I found opportunities right before Christmas that just popped up that you never would have thought would have. So I'm not a big fan of putting plans on hold because of Christmas. So feel free to reach out to me if you want more details about narrowing down the value of your home. If you're a buyer and you want some guidance on what areas would be the highest ROI, or what neighborhoods in Calgary are the kind of neighborhoods that would best suit your needs. I've been doing this a long time, so I'll give you the right advice. I have a lot of experience with this. Just have to reach out to me and I'll be happy to help. See you all.